What if I told you that most real estate investors are knowingly killing their compounding the moment they buy a property? And worse, they don't even realize it until stress, delays, and disasters show up. Stay with me. This might change how you invest forever. Welcome back to Banking for Legacy podcast, where we talk about taking control of your money, building real wealth, and creating a legacy that outlives you. I'm your host, Nelson Pizarro, and as always, please read Becoming Your Own Banker book by Nelson Nash. It's a foundation of everything we talk about in this podcast. Every real estate investor follows the same playbook. They save money, or they'll raise money. You'll stack cash in a savings account to get that down payment just ready to go deploy. Then the moment you buy that property, you don't realize, but you stopped the compounding. Yes, you do own an asset. Yes, there is appreciation and cash flow, possibly. But your capital is now locked up inside a property. And here's a part that nobody talks about. Let's say everything doesn't go as planned. You thought it would take 3 months to close, but it really took 6 months. You thought it was going to take another 3 months to get permits, and it took another 8 months, which is a huge one. And then you want to remodel. It was running you about 3 months longer than expected. And finally, you're ready to rent. But 2 months go by, you're probably 50% occupied. Then another 4 months go by, and you kind of hit the 80% mark, which is good. And then 6 months, and you finally reach that full occupancy. Now you finally can breathe again. You start seeing cash flow coming in. You're paying yourself back. You're paying your investors back. You're all excited. And boom, a massive disaster happens. It could be sewage or fire damage, or the roof just started leaking. You call the insurance company. And then you wait, and then you fight the process that takes to get the money out of the insurance company. And then you find out that you weren't fully insured, and now you have to pay thousands, maybe tens of thousands of dollars out of pocket. The one thing that you forget, which is never going to go away, and here's the truth about it, is your mortgage still has to get paid every month. And if you miss it, you know the real pressure starts coming, with penalties and possibly losing the property. So I painted that picture for a reason, because challenges in real estate are guaranteed. What's not guaranteed is liquidity. So here's a real question. What if there's a way to own the property, survive those down days, and still stay in control? Do you believe me? Or does it sound like another get-rich pitch, which I've heard all of them? Let me introduce you to the infinite banking concept, or some people like to call it IBC. IBC uses a properly structured whole life policy to create your own private banking system. Here's why real estate investors love it. Your money never stops compounding, even when you use it. You have liquidity on demand. No banks, no approvals. You control the repayment terms. You create a financial shock absorber for your own portfolio. You increase your investment confidence and financial profile. Even when renovations take longer, permits stall, tenants fall through, and disasters happen, you still have access to capital, and fast. I hear this all the time. If I put $100,000 into a policy, I can only borrow $50,000 or $60,000 the first year. That is true. And here's the key. IBC rewards consistency, not shortcuts. It is not a hack. This isn't free money. You're building a system. Whole life policy is like starting a business. It takes between 5 to 7 years to really take off. You must fund it consistently. Now let me flip that question. If you put $100,000 into a property, when can you pull out the money? Is it tomorrow? 3 months from now? A year? No. You can't access it until it appreciates, or you refinance, or you're selling the property. And none of these are guaranteed on your timeline. What I'm saying is this: start building your banking system first. Once your policy reaches a number you want, everything gets easier. Here's a comparison: traditional real estate investment. Loan approvals take between 3 to 6 months. Bank underwriting, appraisals, and stress. With an IBC policy, policy loans take between 5 to 7 business days. One DocuSign, no approvals, because it's your money. Problems happen, like remodel delays, permit issues, or vacancies. With IBC, you can control the repayments, which means you can pause the loan repayments until cash flow returns. Let's say a disaster hits, the cash flow will get redirected to emergency funds. With IBC, you just borrow it again. Stop repayments or resume when stable. You stay in control. That's the point of infinite banking: control. When you build an IBC whole life policy, you strengthen your real estate portfolio, increase liquidity, reduce stress, and position yourself as a more stable investor, especially in uncertain markets. Now, if this resonates with you, follow and like me on social media. Share this episode with another investor. Reach out to me directly with questions at 619-997-5141. I'm Nelson Pizarro, and this is Banking for Legacy podcast. And don't forget, your money, your bank, your legacy. Thank you.